Good afternoon, traders. This is Jeff from ZenTrader.ca, and I wanted to talk to you about a thought I had this morning. I wasn't even going to do a video today, but with the big gap up this morning, and I took some profits right probably 20 minutes after the open, I had a thought that it's about human psychology and how we act, and I kind of wanted to just share it with you and get some feedback from you. But the market gapped up today, kind of like I thought. We relieved some of the oversold condition in the market, and I'm still bearish. Do not let my yesterday's long purchases cause you to think that I'm bullish in any way, because I'm not. And today actually went a long way to relieving some of the oversold conditions. You'll see here with this, let me get my mouse. You'll see this box that I drew where we broke out, we gapped up, and it was very positive that we were able to stay above that box. So at the open, I thought to myself, right about here, I thought, you know what, I'm gonna take some half of my profits off the table, because deep down I thought that we were gonna back off of those levels, maybe fill the gap and maybe head lower, but I don't know. So I sold, and I ended up going back to bed because it's so hot here in Vancouver right now. And when I woke up, the market was quite a bit higher, and I was like, okay, that's a good thing. I'm glad I didn't just sell out all my position. But the thought that occurred to me was, when the trade went my way and I sold half of my position, think about the reverse of that and what most people do. Let's say I was in this position long and the market gapped down, clearly gapping down out of an area of consolidation. What do most traders do? They don't normally sell half of their position like they should. Protect your principal, protect your trading account, sell half at the very least if the trade didn't work out. Most traders would do the opposite. They would double down. They would average down. They would buy more of a position of a trade that's not working, because they don't want to admit that the trade's not working. They don't want to take that loss. So just sit there and think about that for a moment. And there's really no reason why most traders aren't making money. Is because they let their instincts, they do what their instincts tell them to, which is to double down. They do what their ego tells them to do. Whereas what they should be doing is selling half, or selling all. But at the very least, don't add. Sell half, and then see where the trade goes. So I'm still in my other half. The late afternoon sell-off really didn't do anything to change the charts. It actually doesn't surprise me. This is the 60-minute of the NASDAQ, and you can see right here, we basically turned back right when we hit the 60 level on the RSI. It's not really a bullish or a bearish thing at this point, because at the start of any attempted rally, you're going to have some pullback. So, to be expected, and I'm out of half of my positions. I've got my stops put in to get out right at break even. So if we go down and hit the areas where I originally bought them, I'm not really interested in the trade anymore. Yesterday morning was really the time to be loading up on the long side. Now that I look back, now that I see my timing charts, and yeah, it was really the time. It was really an easy trade to make, even though at the time it wasn't that easy to make, just because of all the negativity in the blogosphere, the Twitter sphere, or whatever you want to call it. So not a whole lot really to report. I just really wanted to share that, a little bit of insight as to what most traders do when a trade goes against them and what they should be doing instead. Okay, take care, guys. Have a good evening.